9 out of 10 people I speak to have no idea how much life insurance they really need. And guess what? They're either underinsured, which puts their family at risk, or they're overpaying for coverage they don't need. But today I'm going to show you exactly how to figure out your ideal life insurance coverage using a proven 5-step method that hundreds of Australians have used to protect their families. And no, this is not just another life insurance video. It's the one that could save your family from financial disaster. My name is Priyanka Shah, and for the past 5 years, I've helped hundreds of Australians secure the right life insurance at the lowest rates. I've worked with busy professionals, single parents, and even business owners who thought they've had it all figured out, until I showed them the numbers. By the end of this video, you'll know exactly how much life insurance you need, how to calculate it yourself, and how to avoid paying for junk policies. Let's get into it. Let me guess, you're worried about 2 things. Number 1, paying too much for life insurance. Or number 2, leaving your family without enough money if something happens to you. Sounds familiar? Here's the good news. You're not alone, and fixing this is easier than you think. Let me tell you about Sarah, one of my clients. She's a mom with 2 kids and thought that a $300,000 policy was plenty. Then I got her to run the numbers through the Money Smart insurance calculator. And guess what? It turns out that she was $400,000 underinsured. What would have happened if something went wrong? Her family would have been forced to sell her home. This happens more often than you think. But it doesn't have to be you. Did you know over 60% of Australians are underinsured? That's why this video matters. Let's break this down with the simple 5-step formula that a lot of Australians have perfected, and it's your turn now. Number 1, your debts. Write down every single debt that you owe. So think about home loans, car loans, credit cards, personal loans. Write down every single one of them. For example, if you owe $400,000 on your home loan, if you have another $20,000 on your car loan, maybe you have credit cards worth $10,000 outstanding, put that down. That's $430,000 worth of debt in total. Number 2, replace your income. Think about this. If you couldn't work tomorrow, how much income would your family need to replace your income? Multiply your income by the number of years you want to provide for. For example, if you earn $80,000 a year and you wish to provide your family for 10 years of support, multiply that by 10. So that's $800,000 worth of income that you could provide for your family. Simple, right? But most people skip this and leave their family short. Number 3, future expenses. Don't just think about today. What about tomorrow? Think about things like your kids' education, major life events like weddings, first homes, emergency, and even inheritances for your children and your family members. Also consider the fact if your kids are going to public schools or private schools, and make sure you make those allowances accordingly. For example, for myself, what I've done is I've got 2 children. They go to private schooling, and I want to make sure that they can continue doing that if even things don't go as per the plan. I'm allowing for $30,000 each for every year, so $60,000 every year for both the children until they're 18. So they're 8 at the moment. There's another 10 years till they are 18. So allowing for that gives me 60,000 times 10. So that's $600,000 for my kids' future expenses and any other future expenses that I want to cover for. Number 4, final expenses. This is one of the most overlooked expense, but funeral costs in Australia range from $5,000 to $15,000. Don't leave that bill for your family. And last but not the least, number 5, subtract your assets. Subtract your assets. Think about the savings that you have, the investments that you've made, even your superannuation. These are your assets. The money that probably is lying in your offset account and the loan that probably could be worth. Subtract those. Let's say you've got $150,000 in your super, you've got $50,000 in shares and other investments, probably another $250,000 in your offset account. That's $450,000 of assets that you could deduct from the outstanding things that you wanted to provide for. And that kind of gives you a ballpark number that you may want to consider when you're thinking life insurance. Again, this is not a comprehensive list, but this will give you a good indication of what it should be, and then take into consideration your personal circumstances and requirements, and then build up that number accordingly. So putting it all together, we've got $450,000 of debts that we considered. I wanted to replace my income for 10 years at $80,000 a year, so that's $800,000 there. Providing for my kids' future expenses, $600,000 there. And final expenses, $15,000 is what I've factored in. Gives me a total of $1.865 of requirements that I have to make sure that my family remains protected. Take away what I have in my savings and investments and everything else to put together, which was $450,000. So if I deduct 1.865 less what I already have, gives me a number of 1.415, which is roughly around the need that I have for my family. Another thing to note is this is a ballpark number. I may or may not, I may choose to go with that, or you may choose to not go with that. That's completely a personal call. So this gives me a ballpark number of what I and my family need to cover ourselves from any unexpected scenarios. I may or may not choose to go with it. It's a separate thing, but at least this gives you something to start thinking about. Now that you know the formula, here are 3 mistakes I see all the time. The first one, underestimating future expenses. People forget inflation. That $30,000 of school fees that we allowed for, that could be $50,000 in 10 years. So plan ahead. The second one, relying solely on work policies. Your employer's life insurance might not be enough. It's often capped at 1 or 2 times your salary. So please look into this and make sure that it is enough for your family. And the third one, choosing the cheapest policy. Cheap doesn't mean good. You get what you pay for. And junk policies won't protect your family when it matters. Now that you're thinking, this makes sense, but what do I do next? Here's the plan. Use the formula to estimate how much coverage you need. Secondly, talk to a professional, someone who isn't just selling your policy but helping you find the right one. And lastly, don't wait. The younger and healthier you are, the cheaper are your premiums. I know this seems like a lot, but protecting your family isn't something to wing. Life insurance is a peace of mind, plain and simple. And if you still feel unsure, I'm here to help. Book a free consultation and I'll guide you step by step. If you found this helpful, hit like and subscribe for no BS financial tips. I've just started out on YouTube and will be posting more finance and insurance related videos with the goal to help you build wealth, protect your family and have a joyful life. Share this video with someone who needs it. It might just save their family's future. Thanks for watching.